Hello, and thanks for joining us today. I'm super excited you could be here because today we're talking about one of the coolest SBA programs that's really out there. And this is a program a lot of people think they know a lot about, but really don't know nearly as much as they think that they do. It's the SBA 504 program, probably one of the most powerful programs you can get from SBA. And today we've got like a guy that this is all he does. I mean, this is his main niche is SBA 504. I'm so excited to dive in because he probably has more information and knowledge on this than anybody else you're going to talk to in the field. So with us today is Zack Folk. Now he is a business development officer at the St. Louis Economic Development Partnership, where he connects businesses with capital solutions that drive job creation and investment across the region. Now, since joining STL Partnership in 2016, he has held roles in both business development and finance, including credit analyst, before moving into his current position in 2020. Now, Zack actually specializes in marketing and managing economic development finance programs, such as the SBA 504 loan and local and federal revolving loan funds as well. He works directly with business owners and lending partners to guide applications, to structure loans, and to minimize risk, helping businesses improve their cash flow, purchase real estate, refinance debt, or acquire equipment. Now, with BA in economics, political science, and international studies from the University of Missouri, Columbia, and an MBA in economics from St. Louis University, Zack also connects clients to broader STL partnership resources, including business counseling, trade assistance, tax incentives, and incubator space, ensuring businesses have the tools to grow and thrive in the St. Louis region. Zack, what's up, man? Thanks for joining us today.
Yeah, happy to be here.
I'm sorry you can't be here. So, a lot of people don't even know what an SBA 504 program is. So, let's start there. What is the SBA 504 loan program?
So the 504 program is a specific loan program from the Small Business Administration, and it is tailored specifically towards purchasing fixed assets like specifically real estate typically, but also any kind of heavy equipment or anything associated with a real estate project. And those are specifically for owner-occupied real estate. So any small business that's applying for it, they have to occupy the space, typically at least 51% of that total space. But what it does is we work with a bank or any sort of lending institution, and they will finance typically 50% of the total financing, and then we'll come in and do roughly 40% of the project. And that 40% is at a pretty cheap interest rate, typically lower than any bank loan that you can get, and it's amortized fully fixed over 25 years. So it's super helpful for businesses for getting that long-term payment cycle along with kind of a low cash injection into the project. Because typically you'll see most real estate transactions or most bank loans, they'll want 20 to 25% of liquidity into the project, whereas with the 504, you only typically need 10% there.
Okay, love that, and a lot of things to unpack. So on the real estate side of the 504, you said is this for only, and I think you mentioned an owner occupied property where the business owner is going to occupy 51% of the property in question that's actually looking to get financed. Is that right?
Yeah, that's correct. And that is for any existing structure. So if it is a new construction project, so if the business is looking to build an entirely new building, they actually have to occupy up to 80% of the project. They don't have to occupy it all at once, but kind of have a plan in place to occupy that amount within 10 years.
Okay, so we get an SBA 504. We're looking to basically buy a property. We need to be occupying 51% of the building. We can put renters, for example, in the other 49%. Is that correct?
Yes, that's
Okay.
correct.
And then if we're going to use the money to be able to build a new building, then we need to have a plan in place to occupy like 80% of that actual location. The other 20%, for example, we could put renters into.
Yes.
So what I think is interesting about 504 is that most people are really associated with real estate. I mean, everybody I know. But it's also interesting that you mentioned fixed assets because a lot of people don't even know what fixed assets are. And to be honest with you, I've always wanted clarity on that as well because they've even read things about like SBA that even includes the utilities. And so I'm trying to figure this out. So outside of real estate, the 504 program can also cover, you said things like heavy machine equipment. So give me some examples outside of real estate that the 504 can actually cover.
Yeah. So when it comes to heavy equipment, so you would need something that's um, more big equipment that's fixed to a facility. Typically, we say like difficult to move out of the facility. So manufacturing equipment, anything that's probably over $100,000 for equipment that you're purchasing. Um, you can also, within a 504 project, whether it be a real estate transaction or just an equipment transaction, you can bring in other things like furniture and fixtures with the financing, as long as it's a kind of minimal part of the project. You can include things like any sort of professional fees, like if you're getting an appraisal or environmental reports for the project. And then where you can even expand further out of that is with the SBA's their 504 refinance program. You could potentially include operating expenses of the business that have been incurred within the last 18 months or expected to be incurred in the next 18 months within that financing, as long as there's enough collateral with anything you're refinancing, whether it be the building or the equipment, to cover the amount that you're looking for to add in working capital into your business.
Wow, that's crazy. I didn't even know that any of that was possible. So, like, if let's say I'm looking to buy an existing building, I can come in and be able to get this. I'm going to occupy more than 51% of it. Then I could even potentially include some like furniture and things like that into the actual purchase, into the overall transaction, and get that financed as well.
Yeah, exactly. As long as it doesn't reduce the kind of economic life of the overall collateral, you can include a good amount of furniture and fixtures into it. So, office furniture, anything that helps with that specific project. The SBA isn't specific on how much that actually is as a percentage of the project, but kind of a rule of thumb I've looked at is roughly 10% or less.
Okay. So, and you say fixed assets, meaning because when you talk about heavy equipment, I get excited. I think about bulldozers and backhoes because I'd love to drive. Zach, most people know this about me, but I'd love to like sell my business and go drive those things around all day. But not that kind of stuff, like stuff that's fixed the building. So, for example, my buddy Chip owns a manufacturing company, and he has all kinds of machinery in his building for manufacturing, right? You're not going to like get that stuff out of there without like forklifts. That's the kind of fixed assets you're basically talking about.
Yeah, and actually, they're pretty specific that vehicles are not included with that kind of heavy equipment. So anything like bulldozers or forklifts or things like that wouldn't necessarily be eligible for a 504 project. But if something is fixed there, some sort of machine you have, or it could be a lot of different things when it comes to this equipment. I don't want to necessarily specify it to manufacturing type equipment,
Sure.
but pretty much anything that doesn't have wheels is what we're typically looking at.
So give me an example. What's the craziest thing that you've actually seen financed when it comes to fixed assets that even you were like, wow, I cannot believe that we actually got this thing done?
Oh my gosh. I mean, it's hard to say specifically as far as crazy things. I One that we've done recently, actually, we're helping a winery set up a production facility there. So they had been outsourcing their production to another winery, and costs had been going up. So they decided to build their own production facility right there on their specific property. So we took the 504 program. We actually refinanced their loan that was already on that property, put it into the 504, and then added on an additional amount of money to help them finance the building itself, which they're also kind of doubling it as an event space, and then adding into a bunch of different winery making equipment. I've got to learn a lot about how wine is made through that.
Yeah, that's really interesting. I mean, there's so many things I just didn't know the 504 was even capable of doing. Now, when you talk about SBA, typically SBA is, guarantees the loan and they don't offer the money. So how does that actually work? Because you said that, for example, a bank comes in and gives 50%, and then it sounds like somebody else comes in for the other 40%. But I've always thought the SBA was basically would guarantee the loan and the bank was always the one typically doing the financing. So give me a clear understanding of how that works.
Yeah, so the 504 program is actually a direct lending um, program through the SBA. So they're actually funding the money for that 40%. So it's not coming from another source; it's actually coming from the SBA. What they do to fund these loans is uh, every SBA loan closes at the and funds at the same time each and every month. So they collect all of the closing packages, put it together in what they call debenture, and then sell off that debenture to investors. And at that point, when they sell that off, it sets the interest rate for the all the 504 loans across the country, which are exactly the same, and then uses that money to fund those loans. So it is a direct funding program and not just a guarantee program.
This sounds like the Taylor Swift Eras tour where all the tickets went on sale at the same time. Like, why would they try to fund every loan in the country at exactly the same time? That seems like that could get out of control pretty quick.
Well, and it's actually really good for them because it helps them package it up into a good investment vehicle. I hate to bring up like 2008 kind of mortgage packaging, but these are kind of exactly the opposite of that. I think the 504 program has a default rate of under a 0.5% nationwide. And so it's an incredibly safe investment vehicle that they package up each and every month and sell off to investors. And it works well to, it's almost kind of like a bond from the government to fund these loans.
Wow, I didn't know that either. So SBA funds the 504 and then they basically take it and sell it on the secondary market.
Yeah, so actually they sell it on the market to fund the 504. So the SBA doesn't necessarily directly put any of their own money into funding the 504. They're selling it off to investors to fund the all the loans across the country for any given month.
Out of curiosity, who are the investors? Who's a typical investor?
I
I
It
mean, is it
could
like
be
individuals? Is it banks? Is it like
I I think it could be anybody. I believe if I'm remembering correctly, right now I believe it's Wells Fargo who packages it up and sells it off. And so it kind of like any other investment vehicle or any other kind of bonds. If you look at like a municipal bond, it's fairly similar where they package it up and they market it out to the retail investors of the world.
so if I come to you to get a 504, do you help me find the bank that covers the 50% that because SBA is doing 40 and then 50% is covered by the bank? Do you help me find the bank?
I can, yeah. I would say a good portion of the loans I work on are actually coming from banks.
Coming from that shit.
Yeah, because you don't typically talk to an economic development agency if you're looking for financing. You want to talk to a bank first.
Right.
So, but we have in many circumstances have had relationships with businesses in the community where they've come to us and said, "Hey, we're looking at doing this, but we don't necessarily have a bank yet. Can you help us find people?" And then since I work with literally any kind of bank in our area, I've got these relationships. So I had one loan where they were looking for a lender, and I think we had approvals from three different banks, and that particular client got to pick whatever he thought was the best deal to move forward with financing on the 504.
Now you go ahead.
Yeah, and I'd say kind of an important part to that. So while the 504 portion of the financing is all the same for everybody across the country, the bank loan is set by the bank. So they get to set whatever rate that works for them on the financing. So that's kind of where people have a little bit of a wiggle room to shop around for the 504. But whoever you're working with on your 504, it's going to be the same product everywhere.
So in that case, then I have two different interest rates, two different set of terms, right? I have the terms for the bank for the 50% and then the terms from SBA for the 40%.
Correct. And it's basically like having two loans for your property. So initially too, the bank actually will finance the entirety of the project. So while it's going through construction or anything like that, until all the funds have been dispersed out to the business, they will finance that full 90%. And then after that's done, that's when we come in and take out the bank's portion of that financing.
So the bank finances the whole 90%. You're coming in and removing the 40% and then moving it to another source. And then the bank keeps the 50%.
Correct.
What if the bank wants to keep more than the 50% and can match the terms. Does that ever happen?
So it's when it comes to the typical breakdown of a 504 program, we typically see it where it's 50% the bank, 40% for the 504, 10% from the borrower. That's kind of the maximum what you can have for the SBA is 40%, but it can be any percentage, what the bank wants to do, what the borrower wants to do. They're kind of setting the terms really as far as what they're comfortable with. So a bank can put in above 50% and we would lower our portion of it. But as long as the borrower has the minimum amount they have to put in, as long as we don't go over the maximum amount, then they can move forward with kind of whatever structure makes sense for them. The one exception is, so I mentioned it's typically 10% for a borrower. In a lot of cases, or in cases in which it is a startup company, so they've been around for 2 years or less, or it's a single use property, so like a bowling alley, hotel, a you can get specific as a funeral home that has a crematorium, so that's considered a single use property. In both those cases, they have to put in an additional 5%. And when they have to do that, the bank has to be at least 50% in the project.
And then SBA is doing 35% in that case.
Yeah, 35% or 30% if they're both a startup and a single use property.
I think it's interesting that a hotel would be a single use property because they have event space. Like it seems like it's actually could be used for multiple different things.
Yeah, and it does seem like it can be converted. And then there's an argument to be made about a lot of the single use properties that they could be converted to other things. So I know one that I've had the conversation on is a surgery center is considered a single use property. But honestly, if you take out a lot of the surgery equipment, it becomes just an office space. But since the SBA designates that as a single use property, we have to go based on their designation.
So, economic development agency, what do you do? And is this something because you provide a lot of help in other areas, right? And I don't want to get too far. I definitely want to come back to 504, but I don't want to lose sight of this either. So, can somebody come to you for help? Is that typically how it has? Or, like you said, are most people coming to you from the bank for the financing part? Or can I go find an economic development agency in my area to help me with other things?
Yeah, so economic development agencies work on a lot of different things. So I'll kind of talk more about what we do just because it's pretty comprehensive of what a lot of others do. So we'll be working with you to get certain kind of tax incentives, so or tax abatements, different state or federal programs, or even local programs. We've got a business development counselor on staff who can help with a small business and making a business plan, getting them access to data, things like that. We have the World Trade Center St. Louis is underneath our umbrella, and they help businesses with importing and exporting. So really a lot of things that businesses can look at, whether they're the smallest of startups all the way up to the biggest of businesses. They can typically come and talk to us, and we can try to find something to help them make something happen. It's really our goal is to, we're kind of mandated to create jobs and investment in our community. And we've got a bunch of tools, or we have connections to those people with those tools to help those businesses make something happen in our area. And I do get a lot of referrals from other people in my organization who work with other different programs. They're working with our small business development center counselor, and they're expanding to the point where they need a loan, then they can come talk to me, and we kind of help them through that process.
Yeah, I thought it was cool. I don't know if you've ever saw the show Undercover Billionaire. I love that show. Like the very first one that came out, he created this business called Underdog Barbecue, and it was cool because he went to an economic development center and they helped him do the research. They helped him do the business plan. Like they helped him because the whole idea is like he had like $100 and he had to build a business worth $1 million like within a month. And it was cool because he went to an economic development center. And that was the first time I'd ever realized you did a lot of those extra kind of support services. I never even knew that was a thing until I saw that.
Yeah, I haven't seen that show, but glad to hear somebody got use of us and got that out there. Yeah, a lot of people don't necessarily understand economic development because it's such a broad thing that we do. but we can help in a ton of different ways. Even trying to get through some of like the local bureaucracy of zoning or things like that. That's what we're really here to do, is to help make it easier for businesses in our area.
Wow, that's cool. Back to 504, the
Mhm.
10%, 50% bank, 40% SBA, 10% borrower. Do you care where the borrower gets the money? Can I borrow the 10% from another source?
So you can, but there's a little bit of stipulation with it. So if you borrow the money and they use the same thing that you're using the 504 on as collateral for it, so if they want to put any sort of deed of trust or lien
Sure.
on the building, not only does it have to be in a subordinated position to
Right.
us, but it also cannot be paid back quicker than the 504 loan. So you'll have to set out the term of that loan at like 25 years, which is kind of a sticking point for a lot of
Yeah,
people to
because
borrow those
you're not
funds.
able to get financing for 25 years on anything.
Yeah,
Right.
and so people typically have issues with that, or they'll find a source to borrow that is unsecured, or at least secured by something else that's not
Then
associated
the
with the
asset, sure.
project.
So like I could use like crypto financing if I have crypto invested and borrow against crypto, or securities financing, borrow against stocks. So I can use another asset, another form of collateral, potentially borrow against that. I just can't use the asset I'm trying to buy unless, of course, they subordinate, and then I get 25 years, which doesn't even exist. I can't even think of a financing source that would do that.
Yeah, the only time I've ever seen it happen, I was with family who financed their portion of the financing. So other than that, it's typically not something that happens.
Sure. So, what about you talked about term? You talked about really good rates. Are you basing interest rates on prime rate, or how do we configure the interest rate? How low are these interest rates typically?
Yeah, so when we talk about interest rate, they, at least when I quote it to those I'm working with, I quote it in a way that is inclusive of all the fees that are in our interest rate. Right now, I believe it's for a 25-year, it's 6.377%. And that's for loans that have been funded this past month. So,
That's your APR.
yes.
Okay, so APR is including the interest rate and the fees, everything that's really the true cost of actually getting the money.
Yes. So it's inclusive of all of that. And with with the interest rate, it is, I would say, typically tracks along with the 10-year treasury note. I say typically because it's since it's its own investment vehicle, it has its own way of setting that interest rate. But you can kind of see the ups and downs based upon what the 10-year treasury is doing.
How high of loan amount am I able to get?
So you can get up to 5 million in SBA financing, both. So it's collectively of any kind of SBA financing you have, up to 5 million, or if you're a manufacturer, you can get up to 5.5 million. I think there might be some legislation out there to increase that amount currently, but I'm not sure where it's at currently in Congress for that. But it's still a pretty good amount, and we rarely kind of see people hit up to that. And even when they do, and even when they need more than that 5 million, the bank can come in and finance the rest of the portion. So, in a 5 million, the max would be like a $12.5 million project. We've worked with a project up to 17 million where the bank just had more of a portion of the financing there.
Sure. That makes a lot of sense. Yeah, and again, for clarification, you can have up to 5 million. Currently, I think it's like you said, I think it's like they're trying to get it raised to 10 million or something like that. But
Mhm.
but currently you can only have 5 million in money to SBA. Yeah, idle loans and like F7A is like the max you can have extended by SBA at one given time is 5 million. But what if I pay that down? Like I'm curious about that too. If I had 5 million, if I got, let's say, 504 multiple loans, I'm at 5 million, but then I paid down a million of that, then does that million then become available, or is it when I have to pay off that debt before it can actually reset?
Yeah, so it's anything that's your current balance at the time of the application when we go to send it into the SBA. So whatever your balance is at that moment, under 5 million, that's what you have available. And I also do think it's important to note, if you're using multiple different SBA products, the 7A is a little bit different than the 504 in that they look at it as a total project. So while it could be 5 million for the total project, technically the guaranteed portion something like 3,750,000. So if you're working at getting a 504 and 7A at the same time, we typically recommend that you apply for the 7A first, so you can maximize the amount of SBA loan that you're getting to get up to that 5 million.
That's interesting. I never even thought about that before either. So what's the underwriting? What is it like to be able to get approved for something like an SBA 504?
Yeah, so our credit standards, I would say, typically are lower than a bank's credit standards. We're here to make projects that may not necessarily work to get them to work. So a bank does have to underwrite it for their portion, and then typically we're underwriting it either concurrently with the bank or after they have an approval, they send it to us, like saying, "Here's the term sheet." We underwrite it, or they have it contingent upon our approval. And so we look at that, get it approved on our side. As far as the total underwriting, it's pretty similar to what a bank does. So we're pulling credit reports. We're looking at debt service coverage ratios, a bunch of different stuff from the past couple of years of tax returns, looking at balance sheets, things like that. So overall, what the SBA requires is a 1-to-1 debt service coverage ratio. They don't necessarily have a minimum as far as a credit score or anything like that. And banks typically have a higher standard for that in particular. And if a business doesn't necessarily meet that amount, we can submit projections for the business to show that they're going to make it within the next 2 years and still get a loan approved on that side.
Hmm. Yeah, so to your point, it's way harder to get the bank portion of the loan than SBA. Like if you could typically get that bank portion, you're probably going to be fine with SBA in most cases.
Right.
What about business credit? How important is business credit into getting an SBA 504 loan?
Yeah, so business credit's an interesting thing, and I may be speaking a little bit more on kind of my opinion of it versus that. So we do pull business credit, as I'm sure a lot of people have experienced with looking at their business credit score. It's not necessarily reflective of how well the business is doing, kind of depending on some of the lead times for their receivables or payables, different things like that. What we're really looking at is not necessarily the specific score, but the details that are within. How current are they on all their debts? Have they ever defaulted on anything? Give me the context to what's in a business credit report, not necessarily the score itself. Because there's a ton of businesses just by the nature of what they do are going to have lower credit scores because they have longer AR and AP than other industries. And business credit scores, they kind of look at it very like black and white for the actual number, despite what is in the actual report itself.
Are you using a FICO SBS or are you using a combination of D&B, Equifax, Experian?
So we use kind of a combination I think we use Equifax typically, or TransUnion for that. We've got a business credit score system that pulls the actual business side of it along with the personal side for when we get the guarantors on there.
Interesting. Anything else that you think we should know about 504 that I haven't already asked you?
I would say, I mentioned a little bit the refinance program with the 504, and I'm finding, especially more recently, the SBA has relaxed the requirements for getting a refinance. And if businesses who already have a loan on their building or a loan on equipment and are looking to increase their cash flow, the refinance program is a great tool to extend out that amortization, to refinance that debt into something that could be opening up for their cash flow in that. And, when they refinance, we get a new appraisal for all of that, and any equity they already have in their assets counts towards their contribution for that project. So they're not having to add necessarily anything new to that project, and can really improve their cash flow overall with using the refinance program.
I love it. Thanks, Zach. If I'm in St. Louis area, or if I'm in Missouri, excuse me,
Mhm.
clarify. If I'm in Missouri, you also deal with some counties in Illinois as well. Where can I go to talk to you, to talk to your team, to be able to learn more? And if I'm not in that area, where can I go to be able to learn more about finding, an economic development agency in my area?
Yeah, so you can find us at stlpartnership.com. All my information's on there, along with a bunch of information about the loan programs we work with, not only 504, but a bunch of others as well. If you're not in Missouri or near us in Illinois, you can go to the SBA's website. The specific type of entity that works with 504s is called a certified development company. So if you go to SBA's website, you can search for certified development companies in your area. And there's a lot of people across the country like me who know all of this about 504s, who are very specialized in 504s and can talk just as well as I have with all of this.
All right, Zach, thanks for coming on with us today.
Yeah, thanks for having me.
All right, so listen, like I said, Zach, one of the most knowledgeable people you're ever going to hear from on SBA 504. I think he's humble and he says there's other people that might know as much. I don't think so. I think this guy knows more than probably almost all of them out there. So if you are in the Missouri area, or if you're in some of the counties, I think you deal with 8 counties in Illinois, make sure you check them out. They're at stlpartnership.com. That's stlpartnership.com. You can get in touch with them. You can learn more about what they do. And then you can also, if you're not in this area, now you've learned everything you need to learn. I don't know. I learned a lot today that I didn't know about 504s, and you can find an agency, you can find the group that Zach talked about in your area as well. So make sure you check it out with SBA. So make sure, again, if you're in the area, check out stlpartnership.com. If you're in Missouri, if you're also in some of those counties in Illinois, or you're not sure of the counties, get in touch with them at stlpartnership.com to figure that out. And then you can also find a local agency in your own area if you're not, to be able to help you with the 504 and other kind of services that Zach talked about today. Thank you very much for tuning in. Take care. Have a great day.